counting down to that all-time high. Hopefully it should make it today. Maybe not. Maybe next week. 53 points away, by the way, from that all-time high on the Nifty, and not quite too far away even from that all-time peak on the Sensex as well. And who better than Shankar Sharma to celebrate this as well as ET Now's 14th birthday with us. Shankar, hi, and given by your latest diet regime and exercise regime, I must say you're looking younger than previous year.
Yes, and happy birthday to ET Now. I didn't realize it was 14 years.
Yeah.
You look very young for your age too. So, heartiest congratulations. And I look forward to another, by my age projection, I'll be around for the next 60 years. So yeah, so I will wish you on your 74th birthday also.
I don't know if all of us will be here by then or not, but yes, definitely. But, I'm in half a mind actually to talk about health and fitness with you and not markets, but I'm compelled to do so considering we're 35 points away from that all-time peak, Shankar. So what stage of the party are we at? Are we peaking in or are we at the fag end of the party?
No. The party is going to be long, hard, strong. You need to be up, pretty much all night, several nights. This is one hell of a party, so be strapped in, be prepared. I mean, this is just the beginning.
Going to lead this rally, Shankar, from here on, because you've been quite positive about some of the new age tech companies. Talk to us about that, the other top bets that you are looking at this point of time.
Sorry, I lost your voice in the beginning. There is some problem with your audio. Can you just repeat your question?
Yeah, sure. No worries. I was saying that what do you think can drive the growth going forward? Which are the sectors do you think will lead that? Because you've been quite positive about the new age tech companies, Paytm, Zomato, EaseMyTrip, etc. Are those the multi-bagger ideas you're hunting?
No, I've not been very positive on the new listings. EaseMyTrip is a different kind of company. It is actually probably the best one of the new age companies, at least, in terms of it's profitable, it's bootstrapped, it's not been burning cash like the other startups. So that's one of the preferred ones in the overall ecosystem of new age listings. The newer ones are obviously they will take a while to become profitable. Off and on. They will have their moments of spurting up, like Nykaa has gone from, I think, the 120s to, I think, 140 or something. But there is plenty of other choice in this market rather than worry about the listings that happened in 2021 towards the end. So, there is so many things to like in India. There's so many things to like about the market that we can have hours and hours of discussion on that. But be that as it may, my simple point is, I think we are at a fantastic point because we are just kind of reaching all-time highs. And that's usually, technically speaking, a good time to get invested because, then the markets are showing good momentum. Globally, markets are very supportive too. The Nasdaq looks very, very strong. I mean, I tweeted about it in, I think, late March or beginning April, that I felt that spring was around the corner. Spring being defined as not the weather, but the market spring. And the markets have been very, very strong, all of this spring and into summer. I don't see any let-up at all.
But Shankar, if you had to make one choice of, let's say, a broader sector that you're quite positive on, is it, let's say, manufacturing as a theme? Is it the fact that Indian demographics are quite positive, so consumerism is something, and the luxury space, which is seeing a bit of spike? Where do you see the maximum amount of traction? I know you're spoiled for choice, but still, if you had to make a bet.
So, I mean, I'm not sectoral in my personal investing. So in fund investing, you have to be sectorally conscious. You have to make allocations. That's also a risk management cap. But in per se investing, I'm totally agnostic. I buy bottom-up companies that look interesting. They could belong to any sector. And I really don't care. But there are sectors like there in logistics, some very interesting companies which have business models which are very differentiated, which are looking good in terms of their cash flows, return ratios, all the other things. I also own company in the services space. Again, I don't want to say that I mean, obviously, if I own something, I like it. Okay, so that's obviously the case. But there are companies which are into visa processing, which in my view, after COVID, the whole world tours and touring, traveling, etc., is in an upward momentum. We see data from across the world in terms of travel bookings. So all that benefits a particular company listed in India. So, I mean, I'm extremely optimistic on on the services space, on the manufacturing space as well. Some very interesting plays out there. So I don't want to get into names because then obviously that becomes controversial. But I mean, we are cutting across sectors here. The bullishness is across sectors.
Shankar, I recall, I don't know, about a year and a half back when you said Zomato, chai tomato, I'm not interested in that. And that statement of yours went viral. But now that these guys are talking profitability and somewhat, in sketchy ways, showing that as well, are you still interested in Zomato, or is it still as, one can ignore that?
So my good friend Samir is very bullish on it. That much I know. So, but again, remember, each investor, has his own philosophy, and Samir has very good reasons for liking Zomato. For me, when you invest personal money, I have to be extra picky about what I buy. Because ultimately it's my capital. And therein, I don't find Zomato fitting the bill. I mean, I have far better choices outside of the new age listings with good valuation comfort as well. I mean, there are companies which are still mid-teen multiples for 30-35% growth, 30-35% ROEs. And, that's really where my personal capital is headed. I'm looking at several transactions as well in the unlisted space, which will become listed. All of it, I just met a company this morning, probably 7-8 times earnings is what they'll go to IPO at a year from now. I mean, sorry, towards the end of the year. So I don't have to go and buy a Zomato or a Paytm, even if they are turning around or going to become profitable.
And Shankar, you've always been a strong believer that, the index may be doing whatever, but there is a large underlying broader market where there is bigger alpha to be generated. Tell me about some of the interesting themes that you're working on.
So, I mean, like I said, Aisha, there is no theme. I mean, themes come to me. I have to pick 5 themes or maybe 8 themes a year. Not even themes. I mean, 5 or 8 stocks a year, and that's enough to make a decent living. So, I've and of course, I mean, there will be stocks that kind of give you a bit of trouble. In a larger portfolio, there will be a problematic area, but overall, what I believe in, Aisha, is that in India, you don't have to necessarily take a huge amount of risk to make a lot of money because, like I said, across the board, growth numbers are very, very strong for companies. I mean, I bought an IPO of a company which listed, I think, just about 8 months back called Annapurna Swadhisht. And it's a small company, snack food company serving the eastern part of India. I think the listing was at some 50 rupees, 60 rupees, something like that. I forget what it was. Today, it's nearly 260 rupees in less than 8 months' time. And based on what numbers they are expected to deliver, they might deliver in 1 quarter what they did in the entire year last year. I mean, those are the kinds of numbers that are confronting us as investors. So I don't have to buy a Zomato or a Paytm. I mean, for me, smaller companies spread across India, servicing their key individual neck of woods is really the trade. So there are so many companies servicing just one part of India, which I find like one gem and jewelry company came and met me. They're probably going to do an IPO. Again, servicing one part of India, by servicing one little part of India, they're making 130 crores of profits. I mean, who could have ever said that? So like when I entered the business 35 years back, India GDP perhaps for $200 billion. Today, we are adding $250 billion a year in GDP growth itself. I mean, that's a scale that we have come, and that's a scale that confronts us again as investors. I do not believe in the Twitter theory that all the good money and the easy money has been made by all of you old fogies, who all you're in your 50s and, entering your 60s. I think even a guy of 25 or 30, guy or girl of 25, 30 today will be substantially richer 30 years from now. As rich as perhaps, or richer than perhaps we got at a similar age. I mean, the opportunities are humongous in India.
But Shankar, I'm curious to understand, how do you come up with these companies or the small cap companies? How do you go about searching them? Because as you also point out, there are a huge amount of opportunities, there are a lot of stocks to look at. How do you narrow it down for yourself?
So there are many tools, and I've said this on your shows as well as shows many times. Today, the world has become very flat in terms of stock picking. Today, the access to information for a large or a small investor has largely flattened out. Back in the day, there was privileged access. Certain fund managers, certain brokers could get, a lot more information than what a small guy could. But today, because of better regulation, SEBI has been fantastic on that front by making the playing field very level for small investors. You get conference call, you get all presentations uploaded, you get fantastic screener tools available. You can do a lot of the heavy lifting yourself. And then, as I say, if a small investor is not full-time investor, is holding a job, he or she is holding a job, the best is to really follow a marathon approach, a marathon run approach, which means start with 50 stocks. And over 2 or 3 quarters, you will find that maybe 10 or 15 of them are working fantastically well, while the middle is about average, and then you have bad ones towards the end, which are the laggards. Eliminate them and rotate the capital back into your winners. I mean, on a simplified basis, if you were to do just that, I think most investors will handily beat most fund managers for sure. So to answer your question, you can do a lot of this today on your own without having to go to a fund manager.
Okay, a lot of it can be done on your own without the fund manager as well. But at any point of time, Shankar, what's the mix of your portfolio in the sense of large cap versus small cap? Is it completely in small caps? And for a fresh investor, the 25, 30-year-old guy that you talked about, would you suggest to just deep dive and go right into those small cap names or maintain a balance?
My view is that if you're a young guy or girl entering this business, 25, 30 years of age, there's no point wasting time on large caps, really speaking. Large cap is when we have made our money and we want to make sure that we don't lose a lot of it in a downturn. That's the that will need to move to large caps as you become older and you want more stability in your portfolio than the other way around. When you're young, you want to take risk. You are in the game to go from a slum to a penthouse. That's the trade, right? That's the goal. That's your objective. And the only way you're going to do that is by buying a little riskier end of the market. But it doesn't mean blind risk. It doesn't mean a gamble. You're not going to a casino. There is a method to this madness. And the method is what I just described, that take a marathon run approach, buy 50 runners. And at the end of 2 or 3 quarters, you will have 5 or 10 fantastic winners. Back your money into them, most of your money into them, and eliminate the rest gradually from your portfolio. I can guarantee you, I mean, just last year, I remember I did an experimental portfolio on a similar basis into small caps in the period March to June, which was a pretty horrendous period for markets. Okay. And today, when I look at that portfolio, on the average, they are up to 50%. Some of them are up about eight times from that level. Some of them were eliminated. But the average is about 250%. I mean, this is in what, less than 15 months' time. So it's very easy for investors today to make money, far, far, far more than what we used to have when we were, that age.
Shankar, let's talk about health and the new Fit You. What's Shankar Sharma's day like now?
What do you mean now? It's always been the same.
I know, but now that some of us know the secret, now that the secret is out.
Yeah. So, Aisha, I mean, what's your question? By the way, on your WhatsApp, I gave you things which I did not put in that document because that was meant for just for the women folk.
Yes.
So,
I did see that.
Because I didn't want to put it in the document because people will ask too many questions and I don't want to attract the wrong attention. But yeah, I mean, like I said that, for me and for all people of entering our kind of age brackets, it is the ability to enjoy the wealth that India has thankfully given us. We were very lucky in a way that we entered the markets when we were in our mid-20s and India just was beginning to open up, which was the 91, liberalization. So in a way, we were blessed, we were lucky, but not to say that people today entering the markets are not. But we were very, very lucky. Now we have entered our 50s. We are about to at the cusp of entering our 60s. And at this age, I definitely want to be fit enough to enjoy the wealth I have been lucky and to be blessed with. I mean, it's been a blessing to have been born in India. It's been a blessing to have been involved in the stock markets for 35 years. Now I want to enjoy that blessing. And the only way you can enjoy it is by really taking care of yourself, by investing in yourself. We have invested too long in other people's companies. This is my company. This is my manufacturing. This is my services. This is my first priority in terms of investing. So that's what I'm doing.
Couldn't agree with that. You have one place to live in, and that's your own body and mind. Shankar Sharma, always a pleasure having you on the show.
Thank you, Aisha. Thank you for having me, and all the very best for the next 60 years.
Thank you. We will see each other at some point. Okay.